Welcome to Joe's Happy Hour, a show about markets and life hosted by Joe Fahmy. This podcast is for informational and entertainment purposes only and should not be regarded as personalized investment advice or relied upon for any investment decisions. Joe Fahmy is an employee of Zor Capital, and he and his clients may maintain positions in the securities discussed in this podcast. All opinions expressed by Joe are solely his own and do not reflect the opinions of Zor Capital. The views expressed by guests are their own, and their appearance on this program does not imply an endorsement of them or any entity they represent. Thank you and enjoy the show.
Phil Soussan.
Hey, Joe Fahmy.
Thanks for being here.
Thanks for having me.
This is exciting. Thanks for being here. Welcome to Joe's Happy Hour.
Yeah, this is fantastic. I'm so glad that I was able to be here, and thanks again for inviting me.
Yeah.
Always have a fun every time we see each other and talking, so this is nice. A nice opportunity to do the same thing on camera.
I can't wait. I'll give a quick intro. Legendary musician, songwriter, producer, worked with Ozzy Osbourne, the British band Last in Line, Vince Neil Band, written for many others, Toto, the list is endless. So can I say legendary investor? Is that, is that appropriate? Is that appropriate? What's interesting is, like you said, every time we get together, we don't talk music. Mm-hmm. We end up talking markets and the Fed and interest rates and macro and all stocks, all sorts of stuff, options, everything, which is what I love. Before we get into that, do you want to give a quick intro so the audience knows a little bit about
me?
About you?
Well, obviously a musician. I've played with a lot of the people that you mentioned there and worked, been doing it for a few decades. But, as is with, I think, with everybody, there are things which people are passionate about. And one of the things I've always been passionate about is success. And success also has a component which is financial as well. And as we know, that's not something that's very well taught at school or taught when you're growing up. You have to kind of figure it out as you go along.
Yeah, absolutely.
It's something that was interesting to me. My background was very strange. I was actually in pre-med. I was going to be a doctor.
Okay.
And a certain point in time, I had my what's called in England A-level degrees, which are like a halfway to a master's or whatever you want to call it. Physics, chemistry, biology, and all of a sudden when I went to pre-med, they said, no, we don't want biology, we want math. And I said, well, okay, why math? Well, we're going to teach you biology. I said, okay. So I went to a thing called a crammer, where you get to do 3 years of a degree in less than a year. And they said, what do you want to do? And I said, well, I've got to do math. We want to do anything else? You're here, you might as well do something else. So I took economics.
Okay. But you had been playing this whole time?
No. I mean, I've been playing instruments, of course, my whole life, but I had not been playing professionally. It was just after then that I sort of made a decision to switch into music, which was something that I was doing concurrently my whole life. I was good at it and I loved it.
Yeah.
And one day just realized that was where my passion lied. And
so I cut you off. You were cramming the 3 years into one?
Oh, yeah.
Okay. Yeah. And then what happened?
Well, I got pure and applied mathematics and then economics. And so, and then I went off to play music and was broke for a long time.
So you decided not to continue with the whole pre-med thing?
That was the second hardest decision I think I ever made in my life.
Yeah.
The first hardest decision I ever made was telling my parents about the second hardest decision I ever made.
Was it organic chemistry? That seems to be the subject that separates whether people go on with medical school or not.
No, I love chemistry. I mean, it was just, I was a complete nerd. When I had chemistry set when I was about 6 years old.
Okay.
I loved that. I think it was just, I found myself, the human psyche is really good at making deals. And so I would make deals with myself. Look, if I get this homework done, then I can spend as much time as I want playing, practicing, doing whatever. And I would find myself cramming all this work into a very short period of time and then doing what I really love doing. Yeah. And one day that realization was that I was going to have to put all of my time into one or the other. Okay. And what was I passionate about? I know so many friends. I have so many friends who are doctors or in the medical field, and they're all closet guitar players and musicians. Yeah. And they all say the same thing to me. Gee, I wish I had played music. And it's so funny to hear that, Nothing wrong with the medical profession. I think it's fascinating. It's obviously it renders a service that is that is priceless.
Yeah.
But, you know, sometimes people are passionate about more than one thing.
Yeah, no, I know a lot of money managers, even people who are sports announcers, everything. They're all have bands on the side or love playing cover bands, and or even just, you know, like you said, just closet guitarists, and always that's their real passion. But
Yeah.
it's always a challenge because you have pressures from family. Like you said, that was your hardest decision.
It was, and you know, and I wasn't really interested in economics that much. It was more like something I sort of was interesting, mildly interesting. And my dad was involved in finance, but in not in investments as such. Eventually, he was, but I didn't really understand, or as I found out later, agree with his investment style either. I mean, he tended to follow people of repute when they were putting companies together, and he was one of those type of investors, whereas I was somebody who was like, well, let's see if they make any money, and if they make some money, then maybe we'll take a look at it. You know? So
you were using common sense.
God, common sense, yeah. You know, common sense. What is that? The application of what you know to a practical situation, right?
Exactly. Yeah. Or it's not that common, as they say, right? Yeah.
Well, I fell into it by accident. I had a little bit of money, and then my dad said to me, "Hey, you know, take some of this money, give me some of that, and I'll invest it for you." And I said, "Okay." Well, can't go terribly wrong, right?
Right.
This is beginning of 1987.
Oh no.
Yeah, right. So I just get into investing, and I put some money into it, and it's Black Monday, or whatever it was called, wasn't it?
Yeah.
October
Black Monday, yeah.
87, right? And so he says to me, you know, I'm terribly sorry, but everything we have is pretty much worthless. So, oh well, okay. So I lost a little bit of money that I'd saved, and I was a little sore about it, but I got over it. And it wasn't until a few years later, not that many, I was talking to him, and I said, you know, I wanted to get an apartment or whatever, buy an apartment, and I really wish I had some cash or whatever. And he said, well, do you remember that money that you gave me? And I said, yes. He said, well, when it all crashed, I actually added a little bit and bought some more stuff, and it's worth this. And it was a fair chunk of change.
Wow.
So I was quite surprised. And it helped me buy my first condo. Which
You're
I did.
still in England at this point?
No, this is here in the States.
You're here, okay. All right.
And from that point, I said, oh, okay, hang on a second. This is really interesting. I'd like to find out more about it. And that's how it all began. So I started investing probably in the early 90s, early to mid 90s, where I was actually handling my own investment. I got a investing account, and I started buying various different stocks and started reading about them. People had Quotrons back then. Remember those
Yeah, I
things?
remember Quotron, yeah.
So it wasn't like the phone. You can look at it and see what.
Right.
You
No,
have to
it
get
was-
the IBD and look at the
Yeah,
charts.
and then the big antenna and delayed quotes, and that wasn't that long ago.
Oh, of course, right.
Yeah,
And I spent a lot of time in the library and reading Value Line,
Yeah.
and a lot of time on the road reading books about it. We have a ton of time on the road. I mean, there's time when you're just sitting around, and you can do whatever you want, obviously, in the space between shows. And, much of the time is spent in destructive things, sitting and drinking and whatever it is. But after a while, you find yourself wanting to use the time to do something useful. And I found time to be able to read books and, really start to understand and try to figure it all out.
It's impressive that you took that initiative on your own, because we have a lot of mutual friends that tour. Most of the time, they're just saying they're waking up, especially if you're in Europe, from city to city. You don't even know what city you're in, and maybe if you're lucky, you can go sightseeing to a museum. But there's very little working out, reading, self-improvement. That's amazing that you took that initiative while you're on tour.
Yeah, it's very sporadic. That's the bit that's difficult to deal with. So, for example, you might leave a show at 2 o'clock in the morning, go to a hotel, have to get up at 5:30 in the morning to go somewhere else.
Yeah.
Find yourself sitting around on a plane for 3 or 4 hours. So you sort of sleep sporadically, you eat sporadically, you do everything in that fashion. And so you do find these moments when you're sitting there and you may be kind of restless. You don't want to go to sleep, and you might want to read something or learn something. I've always been a very inquisitive person, so I love to learn about things.
Yeah.
I don't understand people who are bored, who say, oh, man, I'm bored. I just don't get that. You know, life's too short. So it's just something which I love doing. So whatever it happens to be, I love learning about stuff. And there's an awful lot to learn about finances. I mean, you know, once again, in this business, it's not a business that you get into to make money. You get into it because you're passionate about it. And hopefully, if you do the right things and you have some success, some money will come along. And the next part about it is you want to make sure you try to keep it. You know, I've seen people in our business do really well. In the 80s, come home with a check one day for $240,000 or $280,000. Huge amount of money in the 80s.
Sure.
And all of a sudden, go out and buy a house and buy a car and lease this and lease that, assuming that the $280,000 is going to continue coming in every year, which it doesn't. Eventually, it tails off, and then you better make sure that you did something good. I try to maintain an even keel. If I do well, my life doesn't change much. If I do badly, my life doesn't change much.
Yeah.
And keep things in perspective. Don't get too extended. Don't buy too big of a house to start with. And these are all great words of advice for people in the entertainment business. I wanted to write a book at one time, and I was going to call it How to Make $1 Million Playing Music. And it was going to have nothing to do with making $1 million and nothing to do with playing music. It was really more of a kind of, you know, entry-level guide on how to sort of manage your money so that you can allow it to grow, allow yourself to live with a great deal of security, and not have any unpleasant surprises along the way. And I never finished the book because there's so much great information out there on that subject now that I just didn't, you know.
I find a couple of things with athletes, musicians, especially, you know, that whole easy come, easy go, or to your point, you get a big contract, you get a big music deal, whatever it is, and you get a big chunk of money and you just assume that it's going to keep coming in. And, you know, we're young. We don't know any better when we're in our 20s and our 30s. So it's not even buying a house and a car. It's sometimes it's just blowing it. Mm-hmm. And to have that level of maturity to say, okay, I'm going to be, like you said, even-keeled and reasonable about this, because I've met so many athletes where they're broke and they've had $1 million contracts.
Yeah.
And they just, again, you just think it's going to keep coming in forever. And it's impressive that you recognize that, you know, to pace yourself.
Yeah, I think part of it came from, you know, you're always living in a certain state of anxiety in what we do, because while something's going well, you know that at some point in time something's going to change. And that's just being a realist. And so that can sometimes give you a little bit of anxiety, and that's where you wanted to sort of appreciate the importance of trying to keep some money for a rainy day. You know, I had a godfather growing up, not an Italian like New Jersey godfather. But I had a godfather, and he's a wonderful man, and he, you know, he left me on his final days with two things. He said, "Do me a favor, two things. One, respect your parents, and the other thing, always put some money aside for a rainy day." And these are the two things he wanted to give me as life's lessons. Something that stuck with me. I mean, I
pretty solid.
Yeah, must have been 14 years old or something when I heard that.
Oh, okay.
And I was like, okay, yeah, I think I can manage those two. You know? Right. So that was where it came from. The other thing I would say is, in our business, it's not unusual today for, I'm a bass player, a guitar player, whatever, for people in my position to be doing more than one thing. It used to be that we would just play bass, and then all of a sudden we had to be, you know, you had to be a clothing designer, a fashion designer, you had to be an accountant, you had to take care of all your business, you had to be a business manager. And then people started multitasking. So people in our business, they have side businesses, they have other things, they have other interests. They may have a related business, a consulting business for music or audio or something, or something completely unrelated. Maybe they've got a passion for clothing, or a passion for whatever it happens to be. And so it's not unusual for people to have, you know, try to develop, you know, different sources or different angles of income as well. So all of these things, you know, it's funny when I hear a musician say to me, "Oh, I need to work, I need to make money." My first, response is, number one, this is not the right business to make money in. If you want to make money, then get a side job and make some money so you can be passionate about what you do.
Okay.
You know, that's kind of what I would do and what I have done in the past. But there's nothing wrong with that. There's nothing wrong with that because truly the passion of what we do in music is from a passionate standpoint. I don't sit down and say, I need to write a song because I need to make some money. I say I want to write a song because I'm feeling passionate about something. And if the inspiration doesn't strike, it's okay.
Yeah.
You know, it's not the end of the world. When I'm inspired, I'll write something. And that's how I do it. And I take care of that with other sources of activities.
Do you find a lot of musicians come to you for financial advice, want to pick your brain because they know you've been successful and you have been responsible with your money? Do they when they start hearing about that, they come to you with?
Yeah, I mean, I don't shop it around or anything, but we start talking, and eventually people will start to say, oh, you know, I'm kind of having a hard time with this or one thing or another. And we'll start talking, and very quickly we'll find that we have shared interests just in the conversation. And I'm always happy to give people advice. I try not to be unwarranted. I try not to be patronizing, but I love to give people advice. I love to help people. I love teaching. I love showing people how to do things. So, you know, that becomes of interest. And sure, I do give a lot of ideas to people or give them some thoughts. Some take advantage. Some do not. Some do what it is that they want to do. I've got some friends who take some insane risks. And for me, it's just like, it's not for me. But hey, more power to you. You know, that's great if that turns you on.
Have you thought about finishing your book?
No, I've been actually writing an autobiography instead, and
Okay.
it's finished. But I'm in the process of reading and rereading, which is a second-guessing thing. You want to be so careful not to tell someone else's story, and then you keep adding to it. And it's at some point in time, I'm going to have to say, okay, that's it.
Yeah.
But that's what I've been doing currently as far as writing.
But to your point with music, and that's awesome, by the way, I can't wait. To your point about musicians and athletes or anything, where there really isn't, I would say even just, I mean, if you have a regular job, you have a 401k, some people contribute, some don't, even if a company matches, and some people say, oh, their company matches, they still don't contribute, which I think is foolish. But a lot of people are not taught what to do, especially, you know, when you're passionate about music, you just want to play. I mean, we have some mutual friends that all they want to do, they could play 6 nights a week, they would, because they're very passionate about it. But the thoughts of investing or what to do with the money is not, it's not even an afterthought. It's just not even a thought at all.
I'll go one level lower than that and say that people don't even have the faintest inkling of economics or how it works. And even down to domestic economics, I mean, understanding what inflation does to your money, how that affects when you are borrowing money, how you're paying for something. I mean, just the value of money, the fact that the value of money decreases. Was it Warren Buffett who said when he started investing, if you took the dollar from back there and today, I think is worth 4 cents of buying power. That's how much has been eroded with inflation through the years.
Yeah.
But just the idea that prices go up, and if you've been around doing anything for the last 2 or 3 decades, it's easy to go back 2 decades and realize how incredibly cheap things appeared to be. But they weren't cheap. That was the money was worth more, so it took less of it to buy those items, and vice versa as we go forward. Those kind of thoughts are not even, you know, most people don't. They sort of glaze over when you say something like that.
I know.
You know.
I know. I've had these conversations with people where you're right. The basic concepts are foreign to them.
Basic premise.
Basic, yeah.
The premise of money and what money represents. You know, people say something gets expensive. I don't think things get expensive. I think your money gets worth less and less with time. I don't know who came up with this brilliant idea that 2% inflation is acceptable. Why? Why 2%? Why not 0? What's magic about the 2% number? I mean, what is that?
I don't know. That was what they were pegged at for a long time.
Sure.
They were perfectly happy keeping it at a, I don't know, maybe that's historically, keeping it at a historical rate. I don't know. It's a great question. I have no idea where they came up with that.
It's almost an arbitrary number. I mean, you know, ideally you want to keep the value of money the same, I would have thought, unless somebody's spending a lot of it on your behalf.
Well, just in general, the costs of things go up, but also wages go. At least recently, they've been going up.
Yeah.
So when people talk about inflation recently, well, wages have been going up too. So people are making more money as well. So it's actually, yeah, it sucks when you go food shopping and everything's 50% higher. But people, I mean, they say, you know, 8%, which we all know is bullshit. But point is, people are also making more money too.
Well, I mean, sure. I mean, look what's happening with Boeing right now. Okay, so their unions are right now wanting. They've offered them. I think they offered them 30%. I read it. Don't quote me on this.
Okay.
So you take 30%. You think, okay, they want a 30% increase. Inflation over the last 3 years cumulatively is what, 21, 22%.
Yeah.
So they're actually looking at about 7% raise. It's not that much all of a sudden when you look at it in those terms. So the point is that increases in wages are necessary because of increases in the cost of living.
Yeah.
It's tied to inflation. Which comes first, the chicken or the egg? I don't know. But they're definitely related. And I think as they increase wages, as they mandate minimum wage increases, that translates into higher prices. And it's the constant, you know, the chasing of the tail.
Yeah.
Something has to break at some point, or at least keep it in a reasonable check. So,
your overall thoughts on the markets right now?
I'm sort of thinking that there's a lot of optimism, but there's also a lot of stuff which is lurking beneath the surface, which is terrifying me. You know, I don't like the debt that we have in this country. I don't like the interest on the debt that we have in this country. If I compare that to the total tax revenues in this country, that starts to scare the hell out of me.
Yeah.
I mean, at some point in time, we're paying all the money that we're getting from income taxes
to interest.
To interest, which leaves nothing for defense, which leaves nothing for anything else. That scares me quite a bit. I also think that, you know, as inflation increases or has increased and the value of money has decreased, it's one thing to look at these reports that come out quarterly and find people have met the numbers or marginally exceeded the numbers that they were expected to make, not taking into consideration the lowered value of those dollars. So are those deceptive? I mean, we're still using multiples on that. At some point in time, the piper has to get paid. So I'm a little bit nervous. I mean, I'm at the age right now where I don't like to take as much risk as I used to take. And I think that's just good housekeeping.
Yeah.
You know, you have to, at some point, start to trim it down. I've been doing, you know, a lot of people have been enjoying lending money to the government and T-bills and making 5% on their money on 3-month T-bills, 5% plus. That's been kind of cool, but those days I think are going to draw to a bit of a close. And I'm very worried when interest rates start coming down, because when interest rates start coming down, everyone's like, whoopee, the market's going to take off. But that's usually symbolic of worsening economic conditions and recession.
Yeah.
So that worries me as well. So I want to take. I've been taking a lot of risk off. If I'm buying anything right now, what I'm focusing on is income, dividend items. I have a very disciplined investment model. So,
would you describe it more value then, or growth, or a little bit of both?
Well, it's variable. I don't have to, you know,
you're not sticking to one or the other.
I don't have to answer to anyone either, which is
right.
a nice thing about being an individual investor.
Absolutely.
You know, a lot of these funds, they're tied. They got to start selling their winners to buy losers, and they're tied to how much percentage they can have in whatever they have. But the model right now, if you look at it, is it's been about 30% income and dividend component.
Okay.
There's about 20% of passive investing, which is just index funds.
Index. Okay.
Index funds. There's some high beta. There's some gold. I've never been above 5% in gold. Right now I'm at 8% in gold. So that's more
Is
than
that
I would
because
ever do.
of the appreciation of gold and you haven't trimmed it, or because you took that type of position?
I took that position.
Okay.
I took that position because when the whole pandemic crypto thing started happening,
Yeah.
people were investing in NFTs.
Yeah.
Where did they go? And so I wasn't sure that I was a big fan of crypto. I think I invested a small amount in crypto. I think I lost $800, and that was the end of it. I probably have a tiny little bit of Bitcoin left somewhere, but it's not really something I'm that confident about. So gold got neglected. It was the neglected child in this whole thing, and it's usually a hedge for inflation.
Yeah.
At least it should have been increasing with inflation, and it wasn't. It sort of stayed for about 3 years. It was just kind of just bubbling
Flatlining
around,
for a while.
flatlining.
Do you think Bitcoin is what the gold bugs wanted
Yes.
to be,
Yes.
but it turned into Bitcoin instead of gold?
It turned into Bitcoin, and I think Charlie Munger said it best when he said that the problem with cryptos is they don't have any intrinsic value. They're only worth what somebody's willing to pay you for them.
Sure.
So that's not a terrible thing. You can invest in artwork and have artwork that's worth millions of dollars as well. Same thing with artwork.
Yeah.
It's only worth what somebody's willing to pay you for it.
Right.
But the fluctuations really bother the hell out of me. To see them go from 63,000 to 16 or 17,000.
Yeah, 20,000 and then back. Yeah.
Yeah, that kind of stuff is a little hairy. I don't know if I want to do that, but I think that's why people just looked at gold and went, nah, what do you want to do with gold? You're not going to make money with gold, but you will have some hedging factor. And right now I like it. I think it's obviously it's done very, very well.
Yeah, it's been doing well.
Mm-hmm.
Yeah.
So it's a small amount. And then the rest of it is just in some, fun money, high beta. And, I've got some holdings in some high-tech companies, of course, the fabulous companies. Mainly Apple. But I do have Adobe, and I do have Google and Amazon as well.
Yeah.
You got to have some of that stuff.
What's your holding period? Are you like just investing, hanging on of like a few months, few years, just never selling it, or
Until something changes.
Okay.
Yeah, I don't believe in buy and hold forever and ever. There's a great exercise you can do, which is to take the Dow 30 and go back 10 years and keep going back 10 years, and then see how many names you can find common to those Dow 30 lists.
Yeah. Well, that's the great thing about the indexes is
Yeah.
they're always taking out the losers, putting in the winners. So it's that's why over every 10, 20, 30-year period they go up, because it's like you said, there's the same components that are in there now weren't in there 10, 20, 30 years ago.
Yeah, I mean, who would have thought Eastman Kodak would have been,
Obsolete almost.
Obsolete almost, yeah. So, no, buy and hold doesn't work. I mean, that doesn't mean to say I don't hold. I started buying Apple in 1998.
Okay.
I made my biggest purchases in 1999 and 2000.
Wow.
And did the responsible thing, which was to trim it from time to time. No, I never sold it all. And if I hadn't sold any of it,
yeah.
we probably wouldn't be having this here. We'd be in Tahiti or something.
Exactly. You'd own an island in Fiji or something. Yeah.
Yeah, but as long as the story is still intact and I like what I see, and I do have a great. I put a great deal of importance on the value of a company as well, and the value of the investment, whether you're going to be able to get your money back out of it over a period of time. So that's something I do. But having said that, I still like, writing a couple of crazy options here and there. I just do it with a very small amount of money.
Yeah, I was going to say, you're an option trader. Well, you always are telling me about different strategies you're doing, and they're not just common strategies. Sometimes they're complex.
Yeah, sometimes I think the nice thing about options is that you can be wrong from time to time and it still doesn't hurt you, or you can still work with it. Someone said that buying a stock or buying a straight call option, you kind of have to be right about it. Right?
Directionally, yes. Yeah.
But if you're writing a put, you just got to wait. You get paid to wait. So as long as the fundamentals are good. So sometimes a position will go against me. I'll write a short put. I'll keep rolling it forward. I'll get it assigned. And then what I'll do is I'll sell a call against it. and make close to the money call against it. At the same time, rewriting the put, but at a lower strike, so I reduce my risk there. And once that gets called away from me, or I could roll that as well, then I bump the put back up again. That's the one strategy I've done best with, and I've been doing that for a long time. So that's my adjustment to writing put contracts. Because obviously, if you're going to write puts, you know that can be you're insuring somebody else's position, is what you're doing.
Yeah. Sometimes you're a willing buyer, but you have to be willing to buy it, and if it doesn't get down there, you collect a premium. But you also have to make sure it's at a level that you're comfortable buying it at.
Yeah, and as I'm sure you're well aware, when you're buying and selling puts, you have to take other things into consideration. How expensive are they? How much volatility is built into it? How much extrinsic value is built into it? And that would make the difference. I mean, you're not going to write a put if there's a microscopic amount of extrinsic value in it. What's the point? But if you've got like high VIX and there's juicy option premiums, then it makes sense. Obviously, if you're selling a put, it's the same as buying a call and vice versa. So the only difference is if you're buying a call, you're paying that extrinsic value. If you're selling a put, you're getting paid.
You're collecting it, yeah.
So if the volatility is at a point where there's very, very low volatility, sometimes it makes more sense to buy the call. And buying calls, I tend to do very conservatively. If I'm buying a call in a position, I'll usually buy something 6 months out and at least a delta 75. So that's not cheap. It's inexpensive, but it gives me some time.
So maybe in the money or at the money?
No, about a delta 75 would be about 75% in the money. So,
in the money, okay, yeah.
So it's below, it's in the money.
Yeah.
Right. But at the same time, it costs a little bit more. But if you're wrong, you can get out of it and not lose everything. It's not like, buying coal options for just a few pennies and thinking, well,
dollar and a dream.
Yeah, and those are the 80% that expire worthless, right?
Yeah. 50%, over 50% of the options every day are 0 DTE options.
I know. And I don't understand it. Honestly, I've had friends try to explain it to me. Friends who are financial people explain what the strategy is behind.
There is no strategy. I don't want to say that. I'm going to offend people with that. But I just, there's a lot of, animal spirits, gambling in the...
It's just a crapshoot, right?
Yeah. There's a lot of people, exactly like you said, trying to turn 10 cents into $10 or $2 into 40 if you get a move in the last hour or two. It's all cash settlement and, one way or the other.
Somebody was trying to explain to me how it's the volume of the zero DTE options and the arbitrage that's involved in that somehow or other moves the markets a certain way as well.
It can,
and that's starting to get to some complicated things to comprehend.
Yeah,
and for me to admit that's usually I'm like, well, really, let me see how that works. But
and I shouldn't say there's no strategy. I'm just saying the majority of people doing it are just gambling, and I don't judge. That's fine, but there are order books and levels that will affect, the way the market will move in the last half hour of the day because of those levels or open interest or whatever's going on that they need to pin it at certain levels up or down.
Absolutely. But it is a complicated thing, and it's not something that I delve into too much.
Yeah.
I would much rather try to find the hated stock, the neglected stock somewhere that nobody's interested in, and it's gone down, and you look at the books and you find that they've got, hey, these people are making a decent amount of free cash flow. You can sort of justify that into the stock price and say, well, if they're making that kind of money, then maybe I want to take that position and hold it. I'd rather do that.
Okay.
Look for those. Of course, sometimes you do those, and then I blew one. I blew Palantir really badly.
What happened with that one?
I was holding it for a long time, and it wasn't really going anywhere fast. And then I decided to take a tax write-off on it. So I sold it. You hold out of it for 30 or 60 days.
Yeah.
Buy back into it. And other things were happening. I didn't buy back into it. And we were sub $10. Now it's what, 40-something?
40-something, yeah.
So.
Well, it happens. It's part of investing and trading. I think a lot of people have trouble accepting that you're never going to get the highs or the lows.
No.
And what happens is after any trade you make, you always find out afterwards.
Of course.
Yeah. So My friend uses the analogy: if you play blackjack and you win $100 and it's the end of the shoe, that's a finite thing.
Yeah.
If you play again, you don't know if you were going to make another 100 or if you're going to lose 100. It's a finite thing.
Right.
You don't know. In the market, if you make that $100, you always find out afterwards what's going to happen. But I always say you're never going to get the highs or the lows. And until you accept that, you know, because you've had some trades where, okay, you sold it at 10, it's at 40, but you also held Apple, you know, God bless, for 20-something years. So, I mean, you're going to have, when you make these decisions, you're going to have things that work out great and things that don't. And not everything we buy is going to work in our favor.
Yeah, there's a great quote from Rockefeller, who said that the only way he made money in the stock market was he bought far too few shares far too late and sold them far too early. So, you know, that's always the problem. You can't ever. I mean, I did have a strategy at one time, which was a risk managed strategy that I used to use with options, where I would take a position. And I would also have a protection in place.
Okay.
So, you know, maybe it was a spread. And there was a risk that was defined between those two strike points. And if I doubled my money, I would sell half the position and then keep the position on, but reduce my risk by 50%. And keep doing that. And that way you can't lose. Figure it out. I mean, once you've made your money, you've already taken your money off the table. And you're allowing yourself to make more, but you're not allowing yourself to lose more than 50% of what remains. And in doing so, but, you know, that takes a bit of planning as well. And sometimes, you know, as you know, option trading, there's a little bit of an impulse that goes in there. It's like, well, hold on, I need to change this, or I need to do whatever. So it's a nice thought, but
see, we get together, we haven't even talked music.
Music, what's that?
It's music. No, I love it. I mean, we've been talking for a while, and it's all you know, financial stuff. I love it.
Yeah, and it's again, going back to what you were saying, I do love to give people advice. I love to talk to my friends. You'd be surprised how many people in music are interested in the financial world, in the investment world, and like I said, I've seen it runs the gamut. I've got friends of mine who play with far more money hard money than they should, and other people who are very, very smart and have a great deal of risk management. I think risk management is really what it's all about. Yeah. The entire stock market can be summed up into those two words, I think, risk management.
It's a great point.
Yeah. And then, you know, and I set reasonable, that's another good thing. Another golden rule of my life is to set attainable goals. You know, so, you know, you can say,
like, try not to kill someone today. Is that attainable? Knock on wood, I've been solid so far in my life.
Well, you know, I mean, it's very easy for somebody to say, oh, I want to sell, you know, I want a number one hit.
Yeah.
Well, that's really difficult to do. How about you just say, I just want to write a song, and see if you can do that, and if you can repeat it again tomorrow. And if you keep doing that, those are things you can control. Those are attainable. You'll feel good about yourself. You'll feel a sense of accomplishment, and you won't be disappointed. And that, you know, will help make those little adjustments on the way. Just like sailing a boat, you make lots of little adjustments, and one day you find yourself right there with your number one album, and that's how you do it. But in the same way, when you're investing, I think you have to set attainable goals. For me, now, I mean, I manage not just my own investment, my wife's retirement, my family's trust, and various other things. And I try to, you know, my goal is to make 7% overall a year. That's my goal. You know, it's
very reasonable.
It's very reasonable. And so I think that's anything more than that, I'm happy. Yeah. Anything less than that, well, then there's something that needs to be fixed. And I don't think as far as I can remember, at least the last 15 years, I don't think I've dropped below that 7. But, you know, the last 2 years, I've been up on those, I think 38% in over 2 years.
Okay.
Which is about 16% a year.
Any bad down years, or you've kept it manageable?
No, I think it's really well balanced with all the different components that I have in there. So other things tend to kick in. So when we've been enjoying, you know, fixed income, that's been a great product.
Yeah.
So that's been carrying some of the other things. The dividend income portfolio, I have it balanced by beta. And so it's about 0.81%, 0.81 beta, excuse me.
Okay.
And it's about 0.81 or 0.8 to 0.9. So I try to keep it below 1.
Yeah.
And I make the adjustments probably biannually. So it's rebalanced every 6 months.
Okay.
And it's very mathematical. I mean, I did this myself. I have a spreadsheet I designed in Excel that does all the balancing for me. So that's been great. And it's really low maintenance. I don't have to do too much. Just it takes care of itself. So that kind of stuff is really, I think, the holy grail of investing, isn't it?
Yeah. I told someone who was fairly young, the market over time, S&P with dividends, call it 9-10%, is what it averages per year over time. And the best in the business do 20. Some of the absolute elite do 30. And if you can, Stanley Druckenmiller is one of the best because of one word and one word only, is consistency. It's 30 years, positive years. Just avoid those big down years. That's why I asked, have you been able to avoid those big down years? And to do that consistently is amazing. And a couple of young people I talked to, they said 20% and you're the best in the business a year. I want to make that every month because that's the mentality, especially if you started getting into the markets during the COVID period, like you said, with NFTs and all sorts of stuff. So I love that you have reasonable expectations.
Yeah, the big downturns for me were the year 2000. Obviously, I was investing quite heavily there. I had invested a lot of money in Qualcomm, as well as various other things. I lost a boatload of money in one or two of those .com names prior to that, which prepared me, which gave me the fear of this is what it feels like to lose a lot of money. So next time you do this, don't throw a ton of money into this, or make sure you do your homework first. So what is that adage that there's no mistakes, only lessons?
Yeah.
So I got that lesson really early. I did some calculations on Qualcomm, and I sort of said, well, I think Qualcomm at the high end, I would see it at hitting $200. And it was $175 on December 31st of 1999. And when the market opened, it hit $200 the next day. And then immediately started going down.
Yeah, I remember top January, early January of 2000.
And I just said, right, that's it. And I cashed out. I sold a lot of all of those things. And I started buying some really unfashionable companies. I bought some energy companies, and I bought some utility companies, and I bought some stuff that was not fun to talk about at cocktail parties.
No, not at all.
Not at all.
Especially back then.
And I was going to the Sunset Marquee, and that's all everybody was talking about. Everyone was giving each other stock advice. And I went, there's something wrong with this picture. No disrespect to anybody, but when the
Jesse Livermore used to say, when the shoe shine boy's giving you tips, that's a problem.
Right. And
that's the analogy. Yeah.
All of a sudden I was like, I just started getting scared about this. And I said, look, I've made a ton of money. Why not buy all these cheap stocks? And it saved me. I had friends who lost everything.
Yeah, no, I did too as well. I know a lot of people who haven't even stepped back in the market since, where the stories of running small amounts into huge amounts and blowing it all, and then they're like, oh, the stock market burned me. And they, 20-something years later, have not even got back in.
There's no excuse for not realizing some gains that you've made. I mean, you really have to. It's not, it's, what is it, the fear of missing out? That's like this crazy mentality that says, you know what, the stock's going up, it's going up, I want to be part of it, I want to put more money into it, You're buying more while it's inflated. And then when it turns around and it goes down the other way, and eventually after a few days of going down, people are like, I can't take the pain anymore, and they dump it. You don't find that in the department stores, do you?
No.
I mean, no one goes shopping, the night
this
before
suit's
Christmas.
$500, it's $1,000, it's $2,000. I got to buy 10 more of these suits at $3,000.
Yeah, I mean, it's the only place where you can have a fire sale and everybody runs for the hills, Yeah. It just doesn't make any sense.
There's so much psychology in it. Like you said, fear of missing out. But I tell people, if you buy a stock at 10 and it goes to 100 and they don't want to take any profits, I'm like, what are you missing out on? You actually there is no missing out. You made money. Missing out would be, I should have bought it at 10 and you didn't, and it goes to 100. But if you're in it, I'm like, what did you miss out on? Like, you don't have to sell it all. That's another concept where people again, round numbers, if you have 100 shares, they think, oh, it's an all or none decision. You can sell 10 or 25. You can take a little bit, like you've been doing with Apple, take a little bit off the table. But these are just concepts where it's just recency bias and you think it's going to go up forever. And there was that story literally recently about someone, it was like 80,000 turned into 450 million.
There's an RBC case.
RBC, yeah, it's insane.
Yeah, $415 million, and then he wants...
It's $500 million. But at what point, like, I mean, okay, you get to, all right, maybe this is not enough. This is not enough. This, like, at what point is that not enough?
The guy was writing and buying options on margin. I mean, with 100% on margin, tons of these options. Where can I get that kind of financial advice?
It's just amazing at some point. But I remember stories just at a different level during the dot-com period.
Yes.
It's like not that much, but millions and millions, and just blew it all. People are...
I got pretty terrified, I think, at the beginning of the COVID pandemic, because I think that's where I had an immediate, really, really massive loss on the books. With everything, as everything was plummeting, and then as we found out, everything started turning around, and it became this inflated market. And sadly, no one was paying any attention to earnings or to multiples or price to sales or price to book or price to any of that stuff, and they just look at the number.
Yeah.
I know we talk, for example, a lot about NVIDIA, and I think it's been a great investment for me. I've done really well with it. I'm very, very pleased with the way that company's worked. But once you're at 90% market share, how can you keep those numbers growing at that same rate of change? So that sort of says to me, well, I'll take a step back, or maybe I can play this on, some related companies as well.
Sure.
So there's nothing wrong with that, but I can turn around to you and say, yeah, I made great money out of NVIDIA. I'm down to 10% of what I had originally. So
it's up 1,000% in the last couple of years. So
I know,
if you're down to 10%, you're still doing fine.
I sold it during the towards the end of the pandemic when it was soaring, and then I kept some, and then I sold it when it split again. And the other thing to do as well is, you don't want to just pay it all in taxes. So if you have some positions that are losing, it's always a difficult thing to do, to sell anything that's losing, right? I mean,
it's the finality of accepting that you were wrong and taking a loss.
Yeah, but if you can sell something and say, well, I'm going to sell it and I'm going to take $1,000 loss, and I'm going to cash in $1,000 gain out of one of my winning positions, net zero on the tax liability, but hey, I got some money for nothing. If you think about it in those terms, it's much more palatable. But I do agree with you. There's nothing smart about buying stock. There's nothing smart about spending money. It's all about selling and how you sell it and how you realize that gain. So any idiot can spend money, right? I don't know.
No, that's for sure. A little bit related to business and music with streaming. Your thoughts on, from what I understand in my layman's view, is that a lot of bands still have to tour because streaming basically, like, no one sells records anymore unless you're in like a Bruno Mars or Lady Gaga or Taylor Swift. Like, those are the only people who essentially sell a lot of records. Is that an accurate statement? Yeah. And that bands have to still tour because streaming has watered down the royalties and everything like that?
I'll give you a little bit of background. I was also on the board of the Recording Academy, the Grammys, for 8 years. And I was vice president of the Grammys for 2 years. Okay. So I was involved. This was in 2012, 2014. This was right when all of this was taking place. So I was very much participant and involved in a lot of those discussions. And it was very close to home. I'm not a big fan of these streaming companies. Spotify, I think that it's cheeky what they're doing. To put it bluntly, or mildly rather.
Well, they're hosting this podcast, so be careful. No, I'm kidding. I'm kidding. I'm kidding. I don't care. I
can't remember his name, but I'd say it to his face. But yeah, it is. I mean, they're paying like virtually nothing for this, the right to use this our music for their business model. So they had approached the recording industry at one point and said, "Look, we're starting these new businesses. It's going to be streaming music. It's going to be this. It's going to be that. It's going to be great. but we need to get off the ground, and you need to kind of give us a reduced rate on performance royalties, which the industry agreed to do. They gave them, I think, about a 90-something% discount compared to terrestrial radio royalties. Well, all of a sudden, their business took off, and then they turned around to the music industry and say, well, what we're paying you is far too much. We need to negotiate it down from there. And we said, no, you're paying yourselves $1 million of stock options every month. It's time for you to, and there's been a fight ever since. So that's the background. The reality is that at some point in the past, and I'm sure you remember this, we used to give people like lighters and headbands and T-shirts and hats and cheap concert tickets and say, hey, come to the show and enjoy the show, and then go out and buy the record.
Yeah.
And when people started streaming it, no one was buying the records. So now what we're doing is we're giving people free music, free records, and saying, here, come to the show, buy a ticket, buy a lighter, buy a headband, buy a hat, and we've gone into the merchandise business. So the source of revenue has just changed. The music is still there and still generates revenue, but where that money comes from now is different. There's a lot to be said on both sides of that.
Yeah.
Some people, I have a feeling as well inside that this is a much more pure way of doing things, because you cannot replicate a live show. So we've retained control of the live show, and in charging tickets for the live show, that's how we make our money now. And we're in the T-shirt business. Merchandise is a huge thing.
Oh, it's big.
Yeah.
It's big. It's really big.
Where we have an issue now is that you have a couple of monopolies that are really handling a lot of the big concerts, and they are sort of, again, taking control away from the music industry.
Even with merch or with the tickets.
Well, they want a complete surround 360 deal, don't they? It's a little bit what the record companies did when they sort of lost their business when streaming started. At one time they used to do everything. They had an art department, they marketing, promotion, this, that, the other. And then they said, well, we don't want to do this, we don't want to do that. At the end, all they did was finance the record, the recording of it, and distribute it. Well, when people started building home studios, the financing the record was of no use. The distribution, well, we still distribute. And then all of a sudden everyone starts digital distribution. So they did themselves out of a job. And then they had to reinvent themselves. So, you got to be careful what you wish for. And when people start taking, pushing it like anything, I mean, look at the revenues from some of these concerts, these stadium shows. I mean, it's insane.
Yeah.
Is the artist getting all of that? No. So, ask yourself if this isn't a bubble,
The streaming, though, is it specifically, you mentioned Spotify, but what about stuff played on XM Satellite or Apple Music? Is it all the same, or is it...
The residuals are, of course, are far reduced compared to terrestrial radio. Terrestrial radio still pay decent money, and they still are happy to pay decent money. We've had... there was a big fight that went on for a long time between the music industry and the National Association of Broadcasters, the NAB, and it was called the PRA, the Performance Rights Act, in which they were trying to reduce the amount of money they were paying in royalties, and we were trying to keep it, tolerable. And the arguments were fantastic. I mean, I was at some of those arguments and debates. There was a couple of organizations that were put together that had representation from all of the music industry parts. And I remember one time there was an argument that they were going to have to, a local radio station might have to add another 3 ads per week. And somebody was very vocal about it and said, well, how about we just, we're not going to pay this, we're not going to pay this. We said, fine, well, you can't use our music, you just run ads 24/7 and see how many listeners you have. There is a cooperative thing between us. They do help the music industry tremendously. There's no doubt about it, but we help them too. They sell advertising space, and that's what they do. So,
yeah.
We're working together, and there has to be an element of appreciation for what each party brings to the table. It's a good business model. It's worked very, very well. So radio is great. I love radio.
Yeah. I feel like this is a much deeper conversation that we could keep going down as far as the whole streaming and everything you just described, because you clearly know a lot about it.
Yeah, but streaming is very exciting as well. I mean, the fact that we're doing this podcast, the fact that anyone can have a show, can put something out there, and it gains its popularity on the merits of that show. That's fantastic, right?
Yeah.
It's not who you know. It's that people enjoy your show and they enjoy what you have to say and they find it interesting and intriguing and they want to check in the next time you have another show. Which I hope you have many, many shows, Joe, by the way.
I appreciate that.
Yeah, but that's another beautiful example of how things evolve. You know, I'm sure there's somebody still mad that we're no longer selling cylindrical vinyl records anymore. You know, but the fact is, it all evolves and it moves forwards. Oh.
It's Paul Tudor Jones, the great investment manager. He says, "You either adapt, evolve, or die." Is paraphrasing his quote. I don't think that's just in the markets. That's in everything.
Yep.
You know, you have to adapt to technology in music and adapt to things are going to change. Like you said, some people collect vinyl and still buy them, but, you know, I don't remember the last time I bought a CD. You know, I don't think too many people listening do. So things change. And same with the markets. There's high frequency trading, there's the Fed, so you can either complain about all these things or adapt to what changes.
Well, it's not. It's like a big buffet. I mean, you don't have to eat everything at the buffet, you know?
That's a good analogy.
But some people like this and some people like that. And, you know, a good example is social media for me. I mean, I delve in it and I dabble in it. I'm not super religious at it. I know some people who have built an entire career out of what they've done. And they may have a music career that they've built through social media. It wasn't what worked for me. I mean, I preferred to approach it from a much more granular angle rather than to try to sort of approach it from a promotional angle to bring attention to what I was doing. But I'm not going to criticize it. I mean, if it works for somebody, it works for somebody.
Yeah.
It's great. I salute anybody who's managed to do something that I can't, that I haven't done, or haven't tried to do.
But the great thing about having a platform is, most people traditionally, to become a music star, they can just do it on their own on YouTube, and then you hear about YouTube stars. Or even in boxing, some of the boxers are YouTube stars. So it's amazing. I'm like you. I don't judge. If you can build that, that's impressive.
Yeah, and that's exactly what I'm talking about. There are artists who have established their notoriety through social media.
Yeah.
Or through YouTube, or through Instagram, or whatever.
Yeah,
whatever.
TikTok sensations, whatever,
yeah.
Everything. It is what it is. It's not. Again, if people want to do it, that's fine.
Yeah.
I think it's a great platform. The opportunities are insane where people are playing video games on Twitch and making millions because kids are saying, "Hey, Mom, can I have $5 not to play the video game, to watch someone play video games?" And then they're just sitting there playing, and they're really good at it, and they're showing you how they're playing, and people are watching that, and those people are making millions from subscriptions. And it's fascinating to me, but it exists.
Yeah, I never really thought I would. I remember when the internet sort of started, or when computers first came up, and I got a computer very, very early in the proceedings. I was on Prodigy. Do you remember that?
Yeah, I remember Prodigy. Yeah.
So I was on Prodigy. That was before AOL.
Before AOL, yeah.
And then I was on AOL. There was I think 4,000 people on AOL when I joined it. I wrote, what was it, Steve Case?
Yeah, Steve Case was the founder. CEO,
yeah, I had a problem. I wrote an email, and he actually responded.
He responded? That's so fun.
But very quickly that exploded, and I would never have. I remember sitting down with somebody who was equally interested in computers and the internet. And the crux of our conversation over a beer was, if somebody can figure out how to make money with this, they're going to be like the wealthiest person on the planet. I couldn't figure out how anybody was going to make money with the internet. I mean, the concept of what you can do, buy something, sell something. But look at all these things, these new industries that have come up that we couldn't have even imagined 20 years ago or even conceived them.
And it'll continue to evolve.
Yeah. So it's fascinating. So you get to sit back and you watch, and you get involved, and you can't do everything, but you can get involved in things that you find passion in.
I thought when Google bought YouTube for whatever it was, like 1.6 billion, I was like, the number was astronomical, and now they're whatever the 30 some whatever the numbers are, billions in revenues and ads. I mean, it's just, and now granted they integrated it into Google, but the point is, same thing when Facebook bought Instagram. You know, they just did a round of funding at under 100 million and paid $1 billion for it, like 2 weeks later, or whatever the story was.
Yeah.
And you think that people are paying more for overpaying, and you don't realize the explosive growth.
So sometimes you have to try to sort of gauge that. You know, there's a part to investing where you look at what a company makes. You find a way to account for the costs of doing business. You can compare it to you know, the interest rates or whatever you want to do. But then there's this one part where you have to project what this company is going to do, and that is really part of the skill of what you're describing. And there are some people who have an insight into that, and they can see where this arrow is headed. And make a decision based upon that. So, yeah, if you thought you were overpaying for some of these companies 10 years ago, looking at it today, that was a buying opportunity, wasn't it?
Yeah, same with sports teams. Every time someone bought a sports team over the last 20 years, you're overpaying. You're overpaying. Mark Cuban buying the Mavericks, overpaying. Bob Kraft buying the all overpaying, and whatever it was, 100, 200 million back then, and they're all worth, you know, 5 billion plus.
Wow.
So it's just, that's a little bit different because it's kind of a monopoly or whatever. That's a limited amount of franchises, and same with English Premier and all these teams. I mean, these valuations are insane. But I don't even know where I was going with this, but same thing in the markets. You know, one of the lessons I've learned is just when you think something can't go higher, it usually does, and just when you think it can't go lower, it usually does. Meaning moves get exaggerated in the markets.
Yeah. Yeah, I get very, very nervous when things go parabolic. I like to see things, move within reason. And I'm a very big, maybe it's my scientific background that's in. I don't have a crystal ball. I know that there's probably some people out there that do. I don't have. I wasn't born in one of those, unfortunately. But you can't really. You can look at charts. You can look at graphs, and that doesn't really tell you where something's going. But, you know, when you start to look at the rate of change of things, that can be much more prophetic.
Yes.
So when you start seeing things, the rate of change of something increasing, that starts to make me very, very nervous if it's not earnings, you know, if it's just prices and stuff. And you start to see things tail off as well. You know, it's the car that's driving along the freeway. Is it traveling at constant speed? Is it accelerating, or is it slowing down? And if it's not accelerating as fast as it was and it's starting to level off, it's reasonable to assume that it will level off and maybe even slow down a little bit. Yeah. This is just some logical common sense, and in a crazy illogical lack of common sense world, right?
I have all these music questions. We haven't again. Once again, we don't even.
We'll skip through a couple of things.
We'll definitely. I'd love to get Brent Fitz involved and have a great conversation because he's who I met you through, and it would be great to continue this for sure. I did want to ask you, you know, not necessarily music related, but having toured in a lot of places and all over the world, what are your favorite cities that you've been to? Like, if you could live somewhere, I'll give you 2 or 3 choices. Either live somewhere or visit or just anywhere in the world.
Flint, Michigan. No, seriously, I love Flint, Michigan. The machine shops there, one of my favorite gigs. I think my favorite country to tour has always been Japan.
Yeah? Yeah,
I love Japan.
Okay.
Always had a great time. They've been, I think, 7 times. And I was so passionate about it that I started learning Japanese, and eventually I had a Japanese restaurant in Los Angeles.
Really?
Yeah, very high-end, very traditional.
Like omakase or one of those?
Similar to that, Similar to that? Not a lot of rolls. It was a very traditional, high-end restaurant. I'm still good friends with my
I did not know
executive, my chef.
You still have it?
No.
Okay.
I also had, it came with a couple of partners, and the problem with partners is partners.
Yeah.
So, but I'm thinking about perhaps looking into doing something here with another Japanese restaurant with using the same
concept.
Chef.
Would you live there? Would you live in Japan?
I don't know. I always find that as a touring musician, it's always wherever you go, it's fantastic.
Yeah.
But the
You know.
reality of after 2 to 3 weeks may be a different thing.
Sure.
You know, New York's a great example of that. I
Yeah.
love going to New York for about 10 days to 14 days. And
Yeah.
after 14, it's get me the hell out of here.
Yeah. For me, it's 3 to 4 days.
3 to 4 days. Okay, wow. You know, I'm more tolerant. But so it's very difficult. I mean, I love being on an island.
Yeah.
Could I live on an island? I mean, there's no fries. Oh, well, there's no fries here anymore anyway, but
Yeah.
there's no, Harbor Freight and places where I like to go and get things to fiddle with and work on cars and all the other
Sure.
crazy things I like to do. I don't know. There's not one single place in the world.
Okay. Brent tells me South America is some of the most passionate fans.
Oh, yeah.
Is that an agreeable point?
Absolutely.
Argentina specifically, Brazil, but he says for some reason Argentina, they're out there all day cheering, all day, just very, very passionate. And they
love
know
music.
everybody in the band, not just the lead singer, whoever's popular. They know everybody in the band.
Yeah.
Is that an accurate statement?
That is not inaccurate.
That is that an accurate statement is what I meant to say.
It is, yeah, it is. It's very
Yeah.
accurate. People are very passionate down there. And funnily, we were talking about this earlier, and nobody buys any records down there anymore. There's no sales in South America. It's all Spotify. It's all streaming services.
Same there. Okay.
Yeah, much more than even here. You know, there's still people buying records and CDs occasionally, certainly vinyl. You know, but over there, it's all streaming. So,
Yeah.
yeah.
It's fascinating stuff. I appreciate. I can't believe this time just flew.
Yeah.
I haven't even got to anything yet.
Oh, man.
So we'll have to save it for part 2
I would love to do that.
for
yeah.
another time. It's been a fascinating conversation. Very interesting.
Thank you. Yeah, it's a pleasure for me to be here and have this conversation because most of the time we end up talking about music because that's why people ask me on to shows because
Yeah.
they're music-orientated shows. So for me, it's refreshingly different to talk about some of the things that also excite me and that I find intriguing and fun and fascinating.
Yeah.
And like I said, there's a lot of people in our business who are interested in finances and investing and improving their I don't want to say quality of life, but you know what I mean.
Yeah. No, they say a characteristic of successful people is their desire to improve themselves.
Right.
And your intellectual curiosity is inspiring.
Wow. Thank you.
I will leave with that because I'm listening and I just love how you have a genuine curiosity to learn, to get better, and that's amazing.
I'll take that coming from you. I'll take that very much as a compliment. So thank you very much.
It is, of course.
But I absolutely, if there's anything that I would describe as a characteristic of myself, it's just being inquisitive, and it's not just about finances. It could be anything. It could be about fixing cars or motorcycles or whatever it is. I want to learn about, how does that work? Why does that happen? It's just intriguing to me. It's just fascinating. There's so many interesting things around. Yeah.
Awesome. Appreciate you being here.
Thank you very much, Joe.
Thank you so much. Thanks for being with us at Joe's Happy Hour. We'll see you guys next time.
Absolutely.
Thank you.